Good morning. I'm Andy Myers at Weiss Research, and this is your morning market update for Monday, December 12th. Stocks are losing ground on Wall Street and around the world as investors reevaluate last week's enthusiasm. The rally on Friday was prompted by a deal for a new treaty binding Eurozone countries. The agreement will enshrine tougher fiscal rules and include automatic sanctions against nations that exceed their deficit limits. Analysts say the plan may help prevent a future debt crisis, but it does little to solve the short-term problems of high borrowing costs for heavily indebted Eurozone nations such as Italy. Moody's investor service echoed those concerns, noting, quote, the absence of decisive policy measures. The agency said it still intends to revisit the ratings of all European Union countries during the first quarter of next year. Moody's announcement comes on the heels of a move by Standard & Poor's to put 15 Eurozone nations on watch for a possible credit downgrade. This morning, the S&P's top European economist warned that the risk of contagion in the sovereign debt crisis remains acute, even to core nations such as Germany. Against this backdrop, the euro is giving up all of Friday's advances and then some. Right now, the shared currency is approaching the 132 mark against the US dollar. The dollar's relative strength is weighing on commodities this morning. Crude oil is down by $1.50 and is now trading below $98 a barrel. Gold, meanwhile, is tumbling nearly 3% to around $1,670 an ounce, well below the psychologically important $1,700 mark. Another factor in commodities' decline is a move away from assets perceived as relatively risky. Investors are searching for safety, giving a boost to U.S. Treasuries and sending the yield on the benchmark 10-year note back down to around 2%. The flight from risk is hurting equities in general, but financial stocks are taking the biggest beating. Morgan Stanley is under the most pressure, losing 6% in early trading. Meanwhile, Citigroup is falling 4%, and Bank of America, Goldman Sachs, and J.P. Morgan Chase are all down nearly 3%. Another one of the day's big stock decliners is Intel, down about 4%. The chipmaker lowered its revenue outlook for the current quarter by $1 billion. The new estimate is now $13.7 billion, below analyst forecasts. Intel blamed the cut on a shortage in hard disk drives. And finally, keep an eye on shares of Boeing this morning. Morgan Stanley raised its rating on the jet maker to overweight, saying Boeing should be able to quadruple its cash flow next year and boost its dividend. That's the latest from Weiss Research. Have a great trading day.